This one macro chart says the Bitcoin bottom is in.
I'm one of those people who have been saying the 4-year cycle is dead.
We've got to zoom out. The 4-year cycle is over. Bitcoin is no longer a halving-driven asset, but a macro asset. And it's not just me who believes it. One of the smartest minds in Bitcoin has returned to the space and has the same opinion. And he also believes that the bottom is in, based on this one indicator. And he's not the only one in this space that believes that the bottom is in and now is an attractive time to buy. Today, we're gonna go through his thoughts and through the chart that's been reliable for the Bitcoin bottom for the last 10 years. We've had enough doom and gloom and bearish news. It's time to get bullish. This is Dante Cook with Bitcoin Simply. Let's go. The last few weeks have been terrible, but that may be coming to an end. A couple of things to get excited about and to be bullish on. Let me start with two that have nothing to do with Bitcoin. Chick-fil-A is coming out with a honey drizzled chicken and waffle bacon sandwich on August 24th for a limited time. Can I get an amen? And football is back, baby. I know it's just the preseason, but I don't care. Who wants to see Aaron Donald rip someone's head off this year? I do. All I can think about is football. Literally, when I saw a video of this vulture, all I could think about was in my playing days, this is exactly what a DB would look like when he would get a pass breakup in one-on-ones. This is what I remember Brian Dawkins looking like when he came out of the tunnel as an Eagles fan as a kid. I'm dreaming of the perfect day when I'm supposed to get stuff done, when the grass is supposed to get cut, some things are supposed to get done around the house, but they don't because I'm locked into my chair. And this isn't meant to be a political statement, but guys, Marco Rubio is one of us.
The greatest show on television today in America is College Game Day. Great show. Starts around 10 or 11, and that leads you to noon, and then the noon game, and then there's a 3:30 game, and then there's a... So I messed... And the idea, like, this is a crazy weekend. It would never happen. So I'm just putting this out there. Okay. But you could start at 10 a.m. on Saturday. You know, run the whole college football day, sleep for a few hours, then you wake up and then you're into NFL game day. Then you got the 1 o'clock game, the 4 o'clock game, the NBC game that night. That is an incredible weekend, in my opinion, in my view, obviously.
All right, seriously, let's get to the meat and potatoes of the episode. Something that's exciting and something to be bullish about is the return of Dr. Jeff Ross, one of the best macro analysts in the space, who not only has a great Bitcoin perspective from his own vantage point, but he also does it because he's managed money for multiple decades. And he believes the Bitcoin bottom is in.
I was reminding myself of where we are and looking at the 200-week moving average, which I think is just a fantastic way to get based in every cycle. And what we're doing right now, the 200-week moving average is usually the point where Bitcoin either bottoms or it's in the region of the bottom. And if you can buy at or near the 200-week moving average, generally 1, 2, and 3 years later, you're doing really well. In fact, I had something that I posted a while back that showed that if you can catch basically the last time it touches the 200-week moving average or buy around that price, in years past, and I'm not saying we're going to have the same kind of cycle like years past, but in years past, 1 year later, the lowest price it was up about 110% or something from that 200-week moving average. And so I'm not saying that's going to happen this time, but I would say with a pretty good amount of confidence that, once we get past this little bear market phase, which I think is nearing an end, if we haven't already hit a bottom, I think about 10, 12, 14, 16 months from now, the price is going to be doing much better than it is right now. So you can't go wrong buying a lot of Bitcoin at or near the 200-week moving average. And that's basically exactly where we are. I think today, at least on my trading view chart, where the 200-week moving average price is $63,997. And as we record this, the Bitcoin price is $63,086. So great time to be stacking sats.
Thanks for watching the channel. We know many of you who watch the channel don't subscribe. Support the channel by hitting that subscribe button. According to Dr. Jeff, Bitcoin is trading within $137 of the single most reliable indicator for the Bitcoin bottom being in over the last 10 years, and that's the 200-day moving average. If you look out 1, 2, and 3 years, according to Dr. Jeff, it's always been a pretty good time to buy Bitcoin when we're near these levels. And we are at these levels as we hover between 63 and 64K. He calls it a fantastic time to stack sats. And if you go back to the beginning clip of the episode, he said Bitcoin is no longer a micro asset and trading on small news, but big news, big things that happen in global markets. And let me give you a couple massive macro news items if you've missed them this week. Number one, the US government just posted their receipts, outlays, and surplus well, never it's a surplus, but their deficit spending numbers for each month. In July 2026 just came out, and the US government was short by $432 billion. 24% of all revenue went to paying interest expense. And the US is about to auction $25 billion worth of bonds at its highest rate ever at 5.23%, which is crazy when you consider that traditional buyers are retreating, price-sensitive investors are demanding higher yields, and the economy is already starting to slow. You know how I know this? Because when the United States sniffles, China sneezes. And China had to inject 350 billion yuan mid-month into their economy, their largest injection ever. But according to the US government, things are fine. You know how crazy they're cooking the books? They actually show in their own CPI data that the cost of health insurance is down 33% over the last 4 years. Who are we kidding right now? And this may be the overhang as to why people believe that the last 6 months to a year have been one of the most disappointing periods in the history of Bitcoin. I've been around Bitcoin for a while. Trust me, it's been worse. But this has been pretty brutal in terms of the psychology of this cycle. So why did this cycle not only feel so disappointing on the way up, but it feels pretty gloomy right now? Dr. Jeff, who we spoke about earlier, has some opinions. He calls it a three-burner theory on Bitcoin's price.
I think of three things. So I think of the price of Bitcoin as like sitting on a stovetop in a huge cauldron. It's like a stew, right? And there's three burners underneath it. The first burner is liquidity. And basically everybody and their grandmother knows about Bitcoin and liquidity and their relationship, how they're really strongly correlated. The one, and I'll talk about caveats to that in a little bit. But let's move on. Burner number two is actually the business cycle, and more specifically, the US manufacturing business cycle, or the US manufacturing PMI, I think is the best thing to correlate with it. And you can see throughout the Bitcoin's short history a direct correlation with the movement of the US manufacturing PMI up or down, and the price of Bitcoin, the movement up or down. And then the third thing is leverage. And leverage kind of goes with the other two. Those are when people are feeling bullish, when the animal spirits are just running hot, when everybody's talking about stupid proof of stake crypto nonsense garbage. And they're all going, levered long 50 to 1 or 100 to 1. Like, those are kind of end stage behaviors that lead to that exponential price move higher in Bitcoin.
Why didn't we see an aggressive bull run like we have for the past 3 cycles? Before we get to that, let's thank our sponsors. Ledn has been the leader in Bitcoin-backed loans since 2018. They want everyday individuals to be sovereign like the wealthiest people in the world, who never sell assets. They only borrow against them. They give you the ability to borrow against your Bitcoin stack. They give you liquidity, fiat dollars in your account in less than 6 hours, and allow you to borrow up to 50% of the value of the Bitcoin you post to their platform. They never lend it out or rehypothecate it, and since 2018, they've issued over $10 billion worth of loans and have over 1,000 5-star reviews to prove the quality of their service. Get started with Ledn today if you want to stay sovereign over your Bitcoin, not use credit, and not sell your Bitcoin. One of the ways to be sovereign over your Bitcoin is by managing your own keys, your private keys. What's the difference between a single sig wallet and a multi-sig wallet? Generating your seed phrase on a hardware device, or doing it with dice rolls, for example. Don't just try to figure all this out on your own. Schedule a meeting with a coach, and they'll walk you through step by step what these things mean and what you can do to protect your assets. Schedule a meeting with thebitcoinway.com, and they'll get you started.
So it used to be that global liquidity led Bitcoin, because throughout the world, throughout the globe, when there was excess liquidity sloshing around the system, lots of people would put that into Bitcoin, not just in the West, not just in the US, but across the world. And China especially was a major player. As we all know, China has really clamped down on Bitcoin ownership and have very, I would say, strongly encouraged their citizens to think about gold ownership. And what's interesting is and Michael Howell has done a lot of work on this. I'm sure you're familiar with him. He's kind of the liquidity guy. Has shown there you can now see somewhere along the way it branched, and now Chinese liquidity or excess liquidity now basically goes into gold, and it has about, I want to say, a 6 to 9 week advanced gold lags the movement of Chinese liquidity by somewhere between like 6 and 9 weeks, and has nothing to do with Bitcoin really anymore. And US net liquidity continues to lead Bitcoin price. So that's nuance number one. Back in 2025, we were still having decent liquidity. It was still high and rising, but interestingly, we didn't have a manufacturing renaissance. In fact, if you go back and look at the chart, especially of US manufacturing PMI, it fell, it crashed in the bear market of 2022, like everything else crashed, and it never recovered. It stayed below 50. It stayed in this contractionary, recessionary phase all the way. It had a couple times where it popped up above 50 into expansion phase, but it, for the most part, stayed below, kind of in the mid to upper 40s, all the way through 2023, 2024, 2025. And that has never happened since the World War II, like since World War II, and since we've been tracking this data. Very unusual. And so for me, that's kind of the main thing. So that was burner number 2, actually never turned on underneath the cauldron of the Bitcoin stew price. Okay, so we had liquidity. We didn't, but we were lacking Chinese participants for the most part. We didn't have US manufacturing taking off like it normally does, like it normally follows these kind of 4 to 5 year cycles. And then number 3, because of that, we didn't have these animal spirits. So we didn't have people levering up, going long, going 100 to 1 leverage to try to jack the price up and to go all in on stupid proof of stake cryptos. That's why I think we had a disappointing bull market, the end to the bull market in 2025. It's also why I think we're having not that severe of a bear market. So even though the price has only come down about 50%, it's because we didn't have that huge hockey stick higher in price during the bull market. So the good news of that, or the silver lining to that cloud, is it means that there's basically less of that excess waste, and that excess leverage to basically get flushed out of the system during this bear market. So even though the price is disappointing while it kind of flops around in the 60s, it's kind of crab market right down here at the bottom of the lake. It bodes well for what's coming in the future.
The headlines are screaming that Bitcoin is out of favor, that there's no liquidity, you need to invest into AI, that Bitcoin is just a hyped up asset. With the Clarity Act being kicked out, prospects seem pretty low. But that doesn't seem to be the case for large enterprises. Enterprises like JP Morgan, who continue to buy Bitcoin through exposures like IBIT. They've now increased their holdings to 650 million in Bitcoin. Swiss's largest bank said that the ETF holdings for them and their clients have increased 230% this past quarter. These are 2 of the most conservative banks on the planet that show that them and their clients are wanting to increase exposure. And what's interesting about Bitcoin through this whole entire price is that this has not been driven by retail, which are primarily the last ones to the party. Bitcoin is showing resilience during this time because with all of the bad news doesn't seem to be affecting Bitcoin's price right now. Even with large players like MicroStrategy selling Bitcoin, with the cold card hack, with the Clarity Act being pushed out, Bitcoin's price doesn't seem to care. Listen to what Matt Hogan, Bitwise's CIO, had to say about this.
And when this hack happened, we barely saw a budge in the price of Bitcoin. Talk to us whether we're seeing a real separation between Bitcoin and the broader ecosystem of digital assets when a hack like this isn't even moving the price of the stock. I mean, maybe is this at the point where hacks don't necessarily undermine investors' confidence in Bitcoin?
Well, I think there's an element of that, but I actually think there's a bigger story going on. We've seen over the last few months that negative news hasn't harmed Bitcoin at all. When Michael Saylor started selling Bitcoin, Bitcoin held flat. When Stretch traded down to 75, Bitcoin held flat. When the Clarity Act odds fell from the mid 40s into the teens, Bitcoin was rallying. One sign that you're at the bottom of a bear market is when an asset stops responding to bad news. In a bear market, it tends to over-respond to bad news and ignore good news. We're in the reverse right now. We're ignoring bad news. We're maybe over-indexing to good news. I think it's a sign that we may be at the bottom of this crypto winter and that we may have a strong end of the year.
So then if you think we're at the bottom and we have a strong end to the year, what would be the next catalyst in your view that could actually move this asset higher?
Yeah, I think actually it's a quiet catalyst underneath the surface, which are these large wealth management platforms. I really think that is the next marginal buyer of Bitcoin coming into the market. And that's not a 1-minute catalyst. That's something that takes place over time.
So there's lots of positive things. The technical signal in the 200-day moving average that's been around for the decade is a reliable indicator of Bitcoin's bottom being in. Macro news hitting that's showing the economy is continuing to get worse, and the large institutional players continuing to increase their exposure. What's not to like? Well, there's a lot of things not to like according to Gen Z, who continue to go further and further out on the risk curve. I got excited about the NFL starting up, but you know what I'm not excited about? All of the gambling that happens. The sad part for Gen Z is that 52% of them are directing money they would have invested into assets like Bitcoin or stocks or other things into betting platforms. Instead of saving, investing, being patient, they now feel like they have to take more risk and to literally gamble with their life savings. It never seems like a good time to buy. And that's true for the best assets. But when you look back 10, 20, 30 years, you're going to wish that you did. The Bitcoin bottom is in. There's a reliable indicator that's been true for the past 10 years is telling us so. Institutions are buying and large governments are backed into a corner. Just look at the bond market in Japan, in the United States, and South Korea. People are needing to be paid extreme amounts of money to take on any of these governments' debts, which should tell you something about the state of the sovereignty of their currencies and their underlying assets backing them. Don't be fooled into thinking now is not a good time to invest into Bitcoin. The signals are telling you otherwise. And that's everything that I try to do in this show. Speaking of signal, give you the signal from the noise. If you haven't already done so, subscribe. And if you believe in Bitcoin, continue to stack sats continuously. One of the best ways to do that is through Bitcoin mining. Work with a partner like SAS Mining so you're not running machines out of your garage and driving your wife and your neighbors nuts. Outsource it to SAS Mining. They'll host your machines, prepare them, and send you sats every single month to your wallet. Use the QR code to get started. This is Dante Cook with Bitcoin Simply. Have fun watching the preseason games tomorrow. I will be. Happy stacking.